What is up, guys? It's KOJOFOREX, you know the vibe. In today's video, I want to show you guys 5 things to know before you enter a trade. I realized that you have so many beginners, even experienced traders who would wake up and then jump into a trade without really going through these 5 basic and fundamental things that they have to. And I think so many people have lost their trading accounts due to that. And you get people coming at you and telling you that, bro, I just lost my $2,000, I just lost my $10,000. And I ask myself, how? Why? Like, what happened? And then if you go deep into the story, you tend to hear some of these basic mistakes that they did and then that caused them that. So I want to throw light on 5 basic principles. When I say principles, it means that it's something that you must make sure you're following before you enter a trade. And once you start doing that, I can guarantee you, you're not going to be losing money. You're hardly ever going to blow an account. Tell you the truth, I get people coming to my DM and asking me, Kojo, when was the last time you blew an account? As if it's supposed to be normal that every trader must blow an account. Trust me, it's not normal if you're blowing an account in today's day and age. With the information world and with the things that we know, if you're still going around blowing your account, you put $500, you blow $1,000, you blow it, bro, you're doing yourself a huge disservice. So you want to stick around, watch this video to the end, and I'm going to give you all the gist you need, all the nitty gritty and details you need to avoid blowing your account and staying consistently profitable. And number 1 of it is always make sure you have your trade confirmations very clear. So many traders enter a trade without waiting for their trade confirmations, and by confirmations I'll come back to that briefly. So I've seen so many traders get ready to trade on the market, and then the moment the setup is not even ready, but they have like that quick finger, they just jump in on the trade, right? Sometimes they may have a legit trade setup, but they probably need to wait for another 15 minutes, 20 minutes to clearly get that confirmation. Usually you'd get a trade confirmation from candlestick closure. Even if it's not candlestick closure, you may be using some moving averages, you may be using some stochastics, you may be using anything, some Bollinger Bands or whatever it is. But if you're trading and then that confirmation is not 100% clear, maybe you need to wait for another 10 minutes, even 5 minutes for a candle to close finally to just know that indeed it's ready, or you need to wait a little bit more, maybe 30 minutes for that moving average to finally cross to know that indeed it has confirmed. You get so many people just rush and be like, okay, at least the moving average was so close, it might as well just cross over, so let me just jump in. Or the candle is just about closing, so it's just left for 5 minutes, what could possibly change, let me just jump in on this trade, and then they jump in. And that's like a huge mistake. Trust me, in this market, with experience and what I know, 1 second can change a lot in the market. 1 second can change a whole lot. You could come and have a strong candle confirmation, very bullish, looking solid for a rally, and just within 1 second of closure, the market will just change that candle outrightly and it will look something different. So you don't want to always risk and then put your eggs in that. So with trade confirmation, I'll use a scenario here to explain that to you. Come and see. So if you're watching here, this is like Euro card, right? So if you're watching Euro card, let's say with a scenario like this, with what I'm explaining to you, it's going to look like, let's say the week began and they were saying Euro card here, and I'm expecting that it's going to come into these regions before a huge drop. You know that I'm a full price action trader. I've been trading price action for the past 12 years now, and I don't think there's anything that's going to change me trading price action. So if you've seen something like this and then you are very interested in trading it, you're just watching the market rally up like that, right? And then finally it comes into your range, then you have to wait for what? That confirmation. That's the conversation we're having. Waiting for confirmation means that as I continuously click these candles, right? Let me zoom in so you get a better picture and better perspective. As the candles unfold, I'm asking myself that, is it ready, right, for the next drop, right? Is it ready to just drop from this range? And here it may look as if it is ready, right? But that's how come I keep warning you guys about the abrupt movement of candles, especially when you are talking about confirmations, right? So if you look at this, I tell you that it's usually advisable to have confirmations looking like this in a cyclical way, right, done on an abrupt movement. Other than that, the next best reversal formation you want to just be more curious and accurate about is watching that double top in the same type of range, right? So seeing that this looks more like an abrupt movement, I will particularly avoid a setup like that and then wait for extra confirmation. So this is what I'm talking about, right? You could get people just get excited about a trade position like this, quickly enter here and then put your stop loss here, right? You're not entirely wrong about the setup, but you're just in a little too fast, right? So in something like this, right, you could easily see the market do what? Come back up. If you're not lucky, wake you out, right? You can see the confirmations are still just like playing out like that. Come back up like that, wick you out, as you can see there, right? Take you out. Even if the wicks are too tight to not take you out, the spread will definitely take you out in a setup like this. And then suddenly what do we observe? Now we have like that drop again. So this drop is just that scenario I am explaining here, and that is when I want to jump in on a market like that, put my stop loss here, right, and then expect a new target price, which is final take profit here, but first take profit around these regions, right? If you watch this trade did play out very beautifully. Take profit was smashed, and this was a position that we took in our community. So you want to click in the link in the description to join the KOJOFOREX Telegram community if you are not part, to be able to enjoy trade setups like this that I share in the community for free. The next bit of point that I want to highlight is considering stop loss in pips. Most traders don't consider stop loss in pips when they're trading. I don't know, but that's like a huge red flag. Very huge red flag. If you're a trader, you want to particularly be very concerned about your stop loss in pips. I can't emphasize that enough. Stop loss in pips. So just like I showed you in the setup with the euro card, the moment you have identified your candle confirmations and everything is looking clean, the next thing, guys, don't play with it, is already assume that if I take this trade, how much am I going to be exposing? Am I going to be exposing 20 pips, 30 pips, 40 pips, 50 pips? Ideally, when it comes to currency pairs, I like to expose nothing more than 50 pips. Though there are certain times where a setup will be so juicy and legit that it allows me to risk a little bit more. Maybe the candle confirmations allowing me to expose myself to 60 pips, 70 pips. I can allow some room for up to like 70 pips, worst case scenario. But anything beyond that, then I'll probably just avoid the setup outrightly, because at that point it will normally reduce the lot sizes that I want to preferably use, because your stop loss in pips move with lot size according to your risk appetite. What I mean is, if you're risking, let's say 2% per your account size, and your normal trade stop loss is, let's say, 30 pips, and then you have, let's say, $1,000 account, when you put this in the risk calculator, this for scenario sake, it could just tell you maybe put one lot. Right now, if the stop loss in pips increases from 30 pips to, let's say, 60 pips, then it's going to obviously divide that one lot into two, making it what, 0.5. So obviously you can also imagine that if it becomes 100 pips, then the higher the stop loss in pips, the lower the lot size. And sometimes the lot size can be so insignificant that you're wondering that, is this money really something I really want to make, and is this trade that juicy? So this is the type of scenario that will let me avoid, you know, when the stop loss in pips is too huge. But that's not the topic for today. The conversation is that you must be aware of the stop loss in pips, because obviously based off that, from what I've said, is what is going to guide you as a trader to be able to determine your lot sizing. So keep that very well in mind. Now, when stop loss in pips is determined, then we go to the next third point. Absolutely important: risk to reward. So after you've got your trade confirmation, after you've determined your stop loss in pips, you're looking at the risk to reward of that setup. Risk to reward will already let you know if the trade is viable, if the trade is worth taking, if the trade is worth risking on. There are certain trades the risk to reward doesn't make it worth taking. So many traders don't know about this. I've seen even professional traders share in public groups and even on their social media, when they're taking trade, that's risk to reward is 1:1, sometimes 1:0.5. It means that they are exposing 1% of their account for a profit target of 0.5. This is ridiculous. This is absurd. This is not normal. As a trader, I'm going to be very frank and fair with you. You cannot afford to take any trade setup whose risk to reward is less than 1:2. 1:1, unless you have a strong edge in the market. If you're even going to allow yourself to be taking a 1:1 trade setup, I can promise you, unless you have an insane win rate, let's say we're talking about 80% win rate, 70% win rate, 90% win rate, then even 70% we can consider you, but 80 to 90, then we can make room, because at the end of the day, if you're doing a sample size of 10 and then you have 80% win rate, it means that you're going to win 8 and then lose 2, which means that if you're still taking a trade of 1:1, right, let's say for every win you're making $50, every lose you're losing $50, you're still going to be up, you know, when you do the permutation and combinations. But if you don't have a huge win rate, a high win rate, just like I've pointed out, let's say your win rate is 40%, 30%, and you're still doing 1:1 risk to reward, you're going to end the month or week or day always negative. So keep that in mind. You don't want to be that trader that allows themselves to take that type of setup. So if you saw what I showed you here, if you can just come quickly, right, if you saw what we have with Euro card, you can clearly see that with where I determined to put the stop loss, which is like 50 pips away, and then the final take profit being here, we had a risk reward of 1:4.7, almost 1:5, and these are some of the targets that you want. So 1:2 would look like this. A 1:2 setup on this trade would look like this, and that is the least I would consider, right? So if you didn't know about risk to reward, you can learn about that with TradingView, and then this is the risk to reward tool for a sell setup, and then there's also one for the buy setup. So if I click here, this is the buy setup. So I calibrated the colors myself. The red one represents the loss, and then the blue one represents the profit. So since we are having a sell position rather than a buy, then I'll use the sell one, and that's just why you're seeing that. And if I click on this, if I hover around it, you can see that this is saying what 2. So that 2 there is signifying that it's a 1:2. So if I just come all the way like this, then you're also going to see that it's currently showing what 1, which means that I'm risking 50 pips for a profit target of what 50 pips. And you can see that I've also calibrated for the TradingView to also show me these things just right at the top. You can see 50 pips at the top here, which is 501, but it represents 50 pips. And then you can see here also that if I pull it down a little bit, you can see 51, which is basically still 50 pips anyway, right? So you can see that the proportion are even the same here, and that is a risk reward of 1:1. And I'm saying that avoid taking setups like that. If you are in any group where the trader is giving you trade setups and then you see anything like 1:1, anything 1:0.5, avoid, run away, delete yourself from that group forever. You always want to just take minimum 1:2, best of 1:3, and ideally 1:4 setups, right? And guys, this brings us to the fourth point that we have to take note of, and the fourth point is entry criteria. As a trader, I really believe that the number one thing, in fact this should probably have been the number one point, but since we're taking it all together, it still makes sense being number 4. The number one thing you should prioritize is having a predefined entry criteria. I've seen so many traders that don't have entry criteria. They just enter any trade, they just have like haphazard concept. Today they are using moving average, tomorrow they are using SMC, the next day they are using, it's not really concise. As a trader, you must have a very defined and concise entry criteria. If it's like 3 entry criteria you're following, just follow that 3 religiously, judiciously. If it's like 4, it's like 5. I particularly have 5 entry criteria or entry confirmations that I continuously follow. Candlestick is like the ultimatum of it because like the final decider, but I have entry criteria that I've taught you guys, several of them, and I follow them religiously. If I don't find my entry criteria, there's no trade for me. So you must make sure that any trade you're taking falls categorically under your entry criteria. And finally, lot sizing. Remember, the conversation is 5 things you need to know before you enter a trade, and we've talked about all the other points. Currently we are on the 5th point, which is the lot sizing. I've seen so many traders just take a trade. Once the trade is ready, they don't even know what lot size to use. They use subjective feelings in determining lot size. Today they are taking lot size of 0.1. Tomorrow they're asking you, what lot size should I use? Should I use 1 lot? Should I use 5 lot? Bro, it doesn't work that way. There are so many lot sizing tools out there, both on the MT4 and MT5 marketplace, that you can just go on the MT4 app or the MT5 app, click on the marketplaces, search lot sizing tool, and then you're going to find dozens of them, which are not expensive. Some selling as low as $10, $20, $30. Purchase this lot sizing tool. It's just so calibrated in a way that it's before the market is ready or before your trade setup is ready, it's already informing you what lot size to take, because because it's programmed in a way that is able to already determine your account size, right? So if you have an account size of $20 or 20,000 or 100,000, the software already knows. So once it's embedded on your chart, once the setup is ready and you pull your stop loss, it's already telling you like, look, you need to take a lot size of 0.5, and that account for what? 5% of your account, or that account for 3% of your account. And you don't want to go overboard. Once you're following this, you're trading properly. Guys, if you want to build consistency, if you really want to build a track record, this is the formula you need to follow to be able to do that. This brings us to the end of this video. I hope you guys have learned a lot from this. In fact, like I always promise you, there's a lot I have to share with you, but we obviously got to start from somewhere. This month of December is a back-to-back month. I promise you one video every day till the month ends. And if you really want to follow along, smash the like button on this video, subscribe to this channel if you haven't done that already, click in the link in the description to join the KOJOFOREX Telegram community. Connect with me on all social media at KOJOFOREX, and I'll see you guys in the next one. Peace.